Hello, welcome to Thai Academy, and today we are going to solve a complex exam question relating to partnership accounts, and we are going to solve a NECTA question of 2019, question number 6. The question states that Esau, Chu, and Linus are in partnership sharing profit and losses in ratio 0, ratio 2, ratio 1, respectively. The following is the trial balance of partnership as at 31st December 2017. As we know that partnership is under agreement and wanakuwa na zile sharing ratio zao ambao wanakuwa wamekubaliana mwanzoni wakiwa wameandaa ile partnership deed au partnership agreement. So this partnership relates to Esau, Chu and Linus at the following details kama mnavyoona kwenye trial balance, and additional information were as follows. Stock at 31st December was 600,000 and current assets are written off at the following rates: land and building 5% on cost, motor vehicle 10% on cost, means that easy fixed assets depreciate. Rates prepaid was 40,000 shillings, maana kupo kuna prepaid rates 40,000, bad debts na adjustments zingine. So required tuliambiwa tuandae partners trading profit and loss appropriation account as 31st December, partnership current account, and bring down the balance. Hizi ndo requirement ambao tuliambiwa tuziandae, profit and loss appropriation account with current accounts. But when you look at the question, remember that profit and loss appropriation account is prepared in order to calculate the profit and loss sharing ratios. So lazima uwe na net profits na zile additions zingine kama interest on capital, interest on drawings, salaries, commission, and etc. But from the question we had no net profit, so lazima ungeandaa income statement ili ucalculate kwanza net profit afu ndo uweze kuendelea na swali. So the first step, I would prepare an income statement relating to Esau, Chu and Linus, and from the details of income statement taanza na sales. Takuwa na sales hapa which had a cost of 3 million. Based on the questions, there was no any return inwards, so we should calculate the cost of goods sold. Less cost of goods, and calculating the cost of goods sold, we are starting by opening stocks. Opening stock from the question at the value of 400,000. Then you add any purchases. Purchases from the question was 1,700,000. So when you add the 2,100,000 hii ambayo tukiadi hapo tutapata ni cost goods available for sale. So hakukuwa na return outwards, ndo maana tukapata moja kwa moja. After there we are going to less the closing stock at the end of the year. So closing stock from the additional information was 600,000. So minus 600,000 tapata 150. 1,500,000. Hii ndio inakuwa ndo cost of goods sold. So when you take sales minus cost of goods sold tapata 150, na hii hapa ndio ndo tumefata ni gross profit. So calculation of gross profit was simple because tulikuwa na details tatu to whereby sales, opening stock, purchases and the closing stock. So after there we are going to add in other income but from the question there was no any other income, so other income was nil, so we're going to less operating expenses. Operating expenses. So operating expenses, we had, there are some of them which had adjustment, but I will start first zile ambazo hazikuwa na adjustment yoyote. Oh, we had the office expenses. We had the office expenses 80,000. Yeah. Also bad debts. The bad debts naipata kwenye additional information Roman 4. Bad debts amounting to 10,000 was written off. So we had bad debts of 10,000. But also we had provision for bad debts. We had provision for bad debts whereby land and building was 5%, while motor vehicle was 20%. So we had depreciation on land and building. So I'll just show the calculation here. 5% times land and building at the cost of land and building $1,200,000. So when you take 5% of 1,200,000, 120, we get 60,000. Afu depreciation ingine was depreciation on motor vehicle, ambao depreciation on motor vehicle tuko now 20%, while the amount of motor vehicle was 400. So it will be 20% times 400. We'll get 80,000. So the adjustment to the depreciation. But also we had rates prepaid of 40,000. So kwa hiyo hapa nitaonyesha adjustment za rates. Kwa nitakuja hapa kufungua rates account. We have a rates account in our workings. Rates had a balance of debit balance of rates at the debit balance of 80,000. So we had a balance BD of 80,000. Lakini kwa kuwa kuna rates prepaid, maana yake hizi hapa ndo itabidi tuzitoe, maana rates prepaid itakuwa ni mwisho wa mwaka, ambapo itakuwa ni balance BD rates prepaid which was 40,000. So the difference hapa ino kwenye profit and loss au kwenye income statement, which itakuwa ni 40,000. So hapo utakuwa na rates 40,000. Adjustment nyingine kufanya yupo ni adjustment for provision for bad debts. Utakuwa na adjustment open position provision for bad debts. Open the total balance, you have the balance BD. Provision for bad debts balance BD was 20,000. Hiyo ndo wa mwanzo wa mwaka, lakini tukaambiwa Roman 4 said that bad debts amounting to 10,000 were written off and bad debts provision to be adjusted to 5% of outstanding debtors. Kwa hiyo kwenye unaenda kwenye trial balance yako, outstanding debtors wapo na amount ya 460,000. Kwa hiyo utakuwa sasa utatafuta balance ya sasa hivi. Kwa hiyo utachukua hiyo outstanding debtors 460,000 then you minus the bad debts ambapo ni 10,000. After there una multiply na hiyo 5%. So tukimultiply utapata hapa 22,500. So the difference between debit and credit itakuwa ni P&L na itakuwa ni increase in provision for bad debts ambayo itakuwa ni 2,500. Kwa hiyo 2,500 naileta hapo, utaandika hapa provision for bad debts, maana itakuwa ime increase 2,500. Alafu adjustment ya mwisho, adjustment nyingine ni ya adjustment for selling expenses. Hapa kwenye Roman 5 wakwambia at 31st December 35,500 was outstanding in respect to selling expenses. Kwa utafungua selling expenses account, selling expenses utakuwa na balance BD ambayo inaitwa neutral balance, ambayo upo na balance BD ya 280,000 but kwa kuna outstanding ambayo outstanding yake ni deni la mwaka huu inabidi tuliongezee, so tunaweka so the total tena ni P&L. So when add itapata, kwa itakuwa ndo adjustment ya selling expenses. Kwa na kile pale niongezea selling expenses. This topic of adjustment of entries hasa niko form 3, kwa hiyo in case labda hapo hujaelewa kwenye nandi kidogo, unaweza kupitia kwenye clip ambayo tutaongelea mambo ya accruals and prepaids na other adjustment ili uweze kuelewa zaidi. So after there nadhani itakuwa adjustment zote zimeshaisha. So baada hapo uta add up all expenses and add up vizuri utapata 588,000. So after there utachukua ile gross profit uta minus total operating expenses. So hapo gross profit ya 150.3 minus 588.3 utapata that is, so this will be the net profit. Kwa net profit itakuwa 9,12,000. And in your question hatukuambiwa tufungue income statement, lakini tuliambiwa tufungue income appropriation, profit and loss appropriation account. Kwa hiyo lazima tungefunga income statement ili utafute net profit ya kupeleka kwenye profit and loss appropriation account. Kwa hiyo hii itakuwa ni section ya kwanza swali letu. Baada hapo sasa tuende kwenye kufungua profit and loss appropriation account. Okay, so we are going to see the important part of our question whereby we need to prepare the profit and loss appropriation statement or account for the year ended 31st December 2017, and it involves Esau, Chua and Linus. So after preparing the income statement and obtain the net profit of 900,012, tutaanza sasa kufungua profit and loss appropriation statement yetu ili kutafuta the share of profit or the share of loss. So tutaanza net profit which we obtain from the income statement. Then we are going to less all income associated to the partners. For example, the interest on capital should be excluded from the net profit kwa sababu ile pale yenyewe ni kama expenses kwa hii partnership business, lakini kwa partner ni income, so hatuwezi kuiadd kwenye net profit. But also partner salaries should be excluded kwa sababu na zenyewe tunakuwa tunalipa partners, kwa itaongeza net profit yetu. And also commissions in case kama zitakuwa kwenye swali etc. Lakini tutaenda kuadd interest on drawings, maana zenyewe zinakuwa ni kama income kwa partnership business. So in our question Roman 6 says that according to the partnership agreement, Linus is to get a salary of 100,020 per annum. Interest 10% per annum is to be allowed to the partners' capital accounts. No interest is to be allowed to the partners' current account. Kwa hiyo hapo utakuwa na interest on capital, interest interest on capital. Have interest on capital, therefore we'll have Esau, Shua, and Linus. So Esau will get 10%, Shua 10%, Linus 10% of their respective capital. Kwa Esau's capital is 360,000, 240,000, and the last one was 120,000. So if you take 10% of 60,000, you get 36,000, you get 24,000, and you get 12,000. But also we should less the partner salaries, ambao yupo ni Linus salaries, less Linus salary which was 120. Atuta adi kingine, maana hizo ndo expenses kwa biashara, so tutaenda ku add up. So you get 192,000. So after there we are going to take the net profit minus hizo interest on capital na salaries. So we get 720,000 which will be shared among partners. So we'll get a profit of 720,000 ambayo itakuwa shared among the partners. So hapo utakuja kuandaa ile share of profits, and from the question the profit were shared according to the profit and loss sharing ratio of 3:2:1. So tutaenda respectively kama ilivyotamkwa. Esau will get 3 out of 6 baada ya ku add 3 plus 2 plus 1. For Chua will get 2 out of 6, and lastly Linus will get a share 1 out of 6. So 720 so when you split the shares among each, we say that Esau will get 360,000, he get 240,000, and the last one $120,000. So add up hivi tapata share profit of 720. Kwa hiyo ndio itakuwa ndo profit and loss appropriation statement yetu, na ilikuwa ni fupi maana it didn't have some complex additions. For example, there was no interest on capital. In case kwa kuna interest on capital tunge add, lakini drawings we are not recording them because drawings has affected profit. So the show profit ambayo tumezipata hapa transfer kwenda kwenye partners current account ambayo itakuwa ndo the other part ya question letu. Kwa this section hapo itakuwa tushamaliza. So the third part of our question will be preparing the current account, the SAU for 10,000. Chua didn't have a credit balance, but Linus had 6,000 and a debit balance of Chua, balance BD. Chua had a debit balance of 10,000. So that's the first part. After there, we're going to all anything which adds capital should be credited in the current account, while anything which decreases capital should be debited from the current account. So we had interest on drawings, interest on capital, and from our previous working on preparing profit and loss appropriation account to after interest on capitals and upon 10% of their capitals. So 10% of 36 utapata 36,000, while here will be 24,000, and lastly will be 12,000. Also we have drawings should be credited, maana inapunguza na ndio capital kwa 60,000 and Linus at 60,000. But we also add salaries. Linus had a salary of 120,000, so lazima tuonyeshe kwenye upande wa credit wa partner salary Linus salary of 120. And from our question we got the share of profits. Or share of profit lazima tu credit, lakini tungepata share of loss in case kwenye ile profit and loss appropriation account ya losses we should debit. So share of profit should be credited, and the SAU and 360, 240, and the last one ali 120. So after there we're just going to balance off our accounts, calculating the balance BD and the balance CD. And I'm going to balance all the accounts. So the credit side of the SAU had 14. So yeah, we had a total of 1, 4. So when we minus 80,000 kiana 330.
Halifax. Gamba.
Here I'm just balancing and adding the debit on the credit side. So we have 194, and the last part will be 198. So we'll have 198. So after this will be the balance carried down, and balance carried down would be brought to the next month or accounting year as the balance begin. Hapa ni normal balance ya kawaida tu, lakini hiyo point to note that after preparing the current account, when the balances are on the credit side as shown in our question here, should be zitakuwa reported on the current liabilities kwenye income, kwenye statement of financial position, lakini balances zikitokea upande wa debit zitaenda kwenye current assets. So these balances nitaenda kuzishow kwenye upande wa financed by vile kwenye capitals and liabilities. So we are going for the last part of our question, whereby we are going to prepare the statement of financial position. So our last part of our question will be preparing the statement of financial position of the three partners, Sau, Chua, and Dinos. So I'm going to start with the fixed assets. And the fixed assets from our question were land and motor vehicles. So I have land, which had a cost of 240. Then we are going to less depreciation. Land at the cost of 1,200,000. So we are going to less depreciation. This will be the cost of land. Then depreciation amount to be here. So depreciation, from additional information, it says that depreciation for land depreciated for land and building 5% on cost. So we are going to have 5% on cost. So we have 5%. So I will show workings here from in the statement of financial position. So 5% of we get 60,000, but this 60,000 lazima tuje kujumlisha na ile provision for depreciation, maana itakuwa imeongezeka. So we'll add with 240, and when we add tapata cost of land 300,000. So difference have a difference of 900,000. The other was motor vehicle. Motor vehicle at the cost of 400,000. So we are going to less depreciation. And I will show the workings here. So depreciation of motor vehicle from the additional information was 20% on cost. So we have 20% times 40. So we get 80,000. This 80,000 naudia kui-add na hii ya kwenye balance sheet ambayo ipo na motor vehicle 160. So we're going to add 160. So 80 plus 160, you get 240. Kwa hapa ni kitoa hapo, tabakia na you have 160. Kwa hiyo ndio itakuwa ndo current assets, I mean fixed assets. So we'll add up. So hadi itabakia na 1 million, itakuwa ni total fixed assets. Sink my ink, itakuwa imeisha, use the red one. So after they are going to show workings for the current assets. So current assets from a question of the closing stock. So you'll have stocks, it should be 600,000. Then we have debtors from our debtors. This I will share it out. Then the debtors amount from the trial balance at a cost of 450. We have 460. So but we had the provision for bad debts, so we should less provision for bad debts, which was 22,500. After there, should have the amount of cash at bank, whereby cash at bank amounted to 50,000 cash at bank. And cash in hand, we had no cash in hand, but we had prepayments. Of 40. So after there, we are going to sum up. So we find the difference here will be 42,700. So we are going to sum up in order to find the total assets. I come to sum it at the end. So after there, we're going the mode of financed by capital and liabilities. So we'll have the capital, whereby we'll have 3 capitals of Esau, Chua, and Linus. And for our question, capitals for Esau were 360, 240, and 120. Then the major difference between the normal statement of financial position and the statement of financial position relating to partners is the treatment of drawing the net profit. Hapa tutakuja kuadd na zile, tutakuja kuadd ile current account zile, maana zilikuwa na credit balance, kwa hiyo tutakuja hapa kuziweka kwenye hapa current account Esau, Chua and Linus. Kwa zile balance ambao tumezipata kule ambao uko ni credit balance tunakuja kuziweka hapa zote, ambao kwa hesabu tulipata ni 330, alafu ingine ni 194, and lastly we are 198. So we're going to sum up.
Yes. Enter picture get it. Yeah.
School at 7:20.
Sure.
They are going to have 7. So last we are going to have the short-term liabilities. And for our question, the short-term liabilities we had was the creditors. We had the creditors, which had a cost of 700,000. Also we had the outstandings. We had outstanding of selling expenses. Outstanding of selling expenses, which had a cost of 5,500. So after they are going to add up. So after summing up, we'll say that the assets will be equal to capital plus liability. So your final answer should be the statement of financial position, and after here we'll be done with your question. Thank you. See you on the next topic.